Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine IAS 21, the effect of changes in foreign exchange rates. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. Now, let me look at those terminologies that are used in IAS 21. Definition of terms. IAS 21 identifies three types of currency. Number one, we have presentation currency. 2, functional currency. 3, foreign currency. So what do we mean by presentation currency? Presentation currency. This is the currency in which the financial statements of an entity are presented. The currency in which the financial statements of an entity are presented. That currency is said to be the presentation currency. Number 2, we have functional currency. Functional currency. Functional currency is the currency of the primary economic environment in which an entity operates. The currency of the primary economic environment in which an entity operates is said to be the functional currency. Number 3, we have foreign currency. Foreign currency. Foreign currency is the currency other than the functional currency of the entity. The currency other than the functional currency of the entity. Any other currency other than the functional currency of an entity, such currency are said to be the foreign currency. If you are in Nigeria, we spend naira in Nigeria, so dollar is a foreign currency to Nigeria, while the functional currency of Nigeria is Nigeria naira. So depending on the region, the economic environment in which that entity operates. So other terms include, number 1, we have exchange rate. Let me have that as number 4. Exchange rate. Exchange rate is the rate of exchange between two currencies. The rate of exchange between two currencies is said to be the exchange rate. Number 5, we have spot rate. Spot rate. Spot, the time of transaction. Spot rate is the exchange rate at the date of transactions. If the transactions occur as at, let's say, October 1st, 2024, the spot rate is the rate as at this date. The exchange rate at the date of the transactions are said to be the spot rate. I want you to note that on initial recognition, all transactions in foreign currency must be translated at the spot rate. Take note of that. Number 6, we have closing rate. Closing rate. Closing rate is the spot rate at the end of the reporting period. The exchange rate at the end of the reporting period is said to be the closing rate. The spot rate at the end of the reporting period is said to be the closing rate. The exchange rate at the balance sheet date, the exchange rate at the statement of financial position date is said to be the closing rate. Take note of that. The balance sheet exchange rate, the exchange rate at the reporting date is said to be the closing rate. Number 7, monetary items. Monetary items. Monetary items are items that can easily be converted to cash. Items that can be converted to cash easily are said to be monetary items. Example of monetary items include the cash itself. Then we have receivables, payables, loans, interest payables, etc. Receivables, payables, loans, interest payables, etc. These are examples of monetary items. Number 8, we have non-monetary items. IAS 21 did not define this term. Non-monetary items are items that are non-monetary. Example of non-monetary items include tangible non-current assets. We have tangible non-current assets. Tangible non-current assets. We may have investment in other companies. Investment in other companies. Then investment properties. Then we also have deferred tax. All these are examples of non-monetary items. Number 9, we have the exchange gains or loss. Exchange gains or loss. Transactions in foreign currency usually give rise to a gains or loss on translation. The gains or loss on translation are called the exchange gains or loss on translation. I want you to know that the exchange gains or loss is recognized in the statement of profit or loss. It is usually recognized in the statement of profit or loss unless it is a movement in fair value. You usually recognize the exchange gains or loss in the statement of profit or loss unless it is a movement in fair value, which will be recognized in equity. Please take note of that. Note the following. Number 1, on initial recognition. By initial recognition, we mean when transactions are recognized in the financial statements for the first time. So, the transaction, if it is occurring for the first time, it will be translated at the spot rate. Transactions occurring for the first time should be translated at the spot rate. Number 2, we have settlement transactions. Settlement transactions. By settlement, we mean payment. Payments. So when you want to make payment, so upon payment for any item, such payment should be translated at the spot rate as well. That is the rate at the time of settlement. Exchange rate at the date of settlement. Then unsettled transactions. That is number 3. Unsettled transactions. Transactions that are yet to be paid for. Unsettled transactions, we mean the transactions that have not yet been paid for. Transactions that are yet to be paid for. So these transactions shall be dealt with like this. Number 1, we have monetary items. I'll explain what monetary items mean. Monetary items are retranslated at the closing rate. I've equally explained what closing rate means. Monetary items are retranslated at the closing rate. 2. Non-monetary items. Non-monetary items are translated at the spot rate. That is, when cost was first measured. The spot rate when the cost of that item was first measured. These are what you should take note of. Now, I want to take question as work example. Keep watching. Example. ABC Co. has a year end of 31st December 20X1 and uses the dollar as its functional currency. On 25th of October 20X1, ABC buys goods from a Swedish supplier for Swedish krona, 26,000 krona. Rates of exchange at 25th of October 20X1, we have $1 equal to 11.16 Swedish krona. On the 16th of November 20X1, $1 equivalent to 10.87 Swedish krona. 31st of December 20X1, $1 is equal to 11.02 Swedish krona required. Show the accounting treatment for the above transactions. If a payment of 26,000 Swedish krona is made on 16th of November 20X1. B, the amount owed remains outstanding at the year-end date. This question is obtained from ACCA study test, financial reporting by Kaplan. Now, let's have the solution to the question. So, ABC Co. has a year-end of 31st of December. This is the reporting date. And uses dollar as its functional currency. On October 25th, 20X1, ABC buys goods from Swedish suppliers for Swedish krona. So, goods were bought on credit on the 25th of October 20X1. Remember, the accounts affected are 1. Purchases account. Because goods were bought, it will affect purchases account. At the same time, it will affect the payables account. This transaction, as I've said, will affect purchases account because goods were bought. At the same time, it will affect the supplier's account. So, goods bought were received. Suppliers is the giver. Remember the double entry principles, which states that we should debit the receiver and credit the giver. Therefore, in this case, when goods were bought, you will debit the purchase account, then you will credit the supplier's account. Solution. The transaction occurs on the 25th of October 20X1. So ABC is the name of the entity, ABC Co. So the original transaction now, which occurs on the 25th of October, so on 25th of October 20X1, ABC buys goods from a Swedish suppliers for Swedish krona of 26,000 krona. 20X1, 26,000 Swedish krona, 26,000. As at the date of transaction, what was the exchange rate? So the spot rate on the 25th of October 20X1 is 11.16. See, this figure is in krona, and this is also in krona. It is not this one that is in krona. Suppose this is krona equal to this dollar, then you multiply, but this that is not in 1. This one is not in 1. This one is not in 1. So you divide. The krona and kronas are not in 1. So you divide. But if kronas is 1, if you have 1 krona equal to this dollar, if krona is in 1 and this is krona, then you multiply. So in this case, you will divide 286,000 divided by 11.16. Divided by 11.16 krona. 286,000 divided by 11.16. So you have 25,627 dollars. So what is the double entry? So you debit purchases account with 25,627 dollars. You credit payable account or suppliers with the same amount, 25,627. Then on settlement date, So I'm answering the A part of the question. In A part of the question, you have to show the accounting treatment for the above transactions if a payment of $286,000 is made on 16th of November 2021. So the settlement date is November 16, 20x1. So you want to settle 286,000 within kronas. 286,000. What is the spot rate at the date of settlement? The date of settlement, the spot rate is 10.87. No, this is not 1, and this krona, as with this krona, is not also 1. So you divide. So divided by 10.87. 286,000 divided by 10.87. So you have 26,311. $26,311. So when settlement is made, the money will be paid to suppliers. So in that case, you debit the suppliers account to suppliers or payables. Debit payables account, payable or suppliers account. How much do you owe the supplier before? The amount owed to supplier was 25,627. So you debit the supplier with that amount in order to settle the supplier. So you credit cash. The amount paid to suppliers is 26,311. 26,311. So if you look at this, the credit side is greater than the debit side. The amount credited is greater than the amount debited. So that means you will need to have exchange gains or loss that will be transferred to the statement of profit or loss. How much is the difference? 26,311 minus 25,627. You have $684. That is balancing figure. That is the amount that will be transferred to the debit side of the statement of profit or loss. That is to show that this is exchange loss on the transaction. Let's take the B part of the question. You are to show the accounting treatment for the above transactions if the amount owed remains outstanding at the year-end date. So B part of the question. So at the time of transaction, that is original transaction, the goods bought was 286,000 kroner. The exchange rate, let me have, the date of purchase is October 25th, 20x1. 286,000 kroner divided by the exchange rate on the 25th of October is 11.16. 11.16, that amounted to you have 25,627. This amount will be debited to your debit purchases account with 25,627. You credit suppliers or payables account with the same amount, 25,627. Then, at the end of the period, you were told the amount owed remains outstanding at the year end. Remember, the end of the year is December 31st, 20x1. So, December 31st, 20x1. This amount owed had not been settled. The amount owed is 286,000 kroners divided by the exchange rate. Remember, I have told you, if it is a monetary items, that you use the closing rate. If it is not a monetary item, that is non-monetary items, you use the spot rate. So the payables is a monetary items. It's a monetary item. You want to settle the suppliers. That is monetary items. That means you will use the closing rate, which is 11.102 divided by 11.02. 286,000 divided by 11.02. That gives us $25,953. $953. So the balance, the amount you have at the end of the reporting period at the balance sheet date is greater than what you have here. That means you have the exchange loss. Then exchange loss will be, which will be debited to the statement of profit or loss. You have debit statement of profit or loss, which is the difference between 25,953 and 25,627. So you have you subtract it. You have $326. You debit the statement of profit or loss, then you credit suppliers or payables with the same amount, $326. So this marked the end of the solution to the question. Please drop the love emoji. Also share the video with others. Thanks for watching ZICA.